Hey, what's up, guys? Sam here, and I'll be doing the weekend review for the week ending in OPEX of December 2025. So, another week is in the books. Not a particularly exciting week, but if we look up here in the top left, it hasn't really been an exciting week from an index perspective for 3 weeks in a row now. So, pretty fun. Some could argue it's been even longer than that. If you kind of count this, if you remove this little dip here, it's been pretty much trading sideways, but it's trading sideways in a bullish way where you're holding above the weekly 10 EMA. So that still remains pretty bullish. A lot of the stuff that I'm going to cover in this video is stuff that we've already covered because nothing really has changed. So we'll go through the things that we look at, which is going to be the index, the bond market, we'll look at the volatility, and we'll come up with a game plan for next week. So I kind of want to front run what I think is going to happen, but I'll wait until the end of the video. We'll put all the pieces together, and then towards the end of the video, I'll kind of tie it all together and see if it still makes sense with what my bias is going into next week. So here on SPY, again, nothing remarkable here. A little bit of a lower close, a lower high, and a lower low on the candle. But I kind of feel like I'm kind of reading a barcode here, so not putting too much weight on that. Really kind of what I'm looking at is the center point of this big candle that pushed back above the 10 weekly, which is the white line. And as long as you're holding above that, I think it's perfectly fine. However, I do want to stress this. The weekly is still in amazing shape, which is a max bull. However, the daily is not really all that great, mostly from a momentum point of view. See how the momentum label there is purple? That means it's starting to become red, right? It's not quite red, but it's more towards the bearish side of things. And the reason's pretty simple, right? This has become really messy. When this gets messy like this just indicates no trend. And so whenever it says no trend here, you always want to direct your eyes right below, and you go with the color of the thrust, which at least for now is the red color. But it is not aligned, which means it's a weak thrust. So kind of a sloppy signal, and you end up with basically a neutral chart. The score here goes all the way up to 100, positive and negative 100. And here on SPY, you have a neutral 5% out of 100, which is basically nothing. So not a whole lot to see there for now, just more decoding the barcode. So let's go over here to the QQQ. And on the Qs here, kind of the same thing, although there is a little signal that triggered today, which I'm very happy to see. We'll take those. So it does have a little bit more spunk than the SPY, not by much. The SPY was 5%, this is 15%. Momentum is better here. It's gray, again, very mediocre momentum, but it is better than purple, which is kind of the way you read purple is it's neutrally bearish, right? So it's not bearish, but it's leaning bearish. Here with momentum gray, it's just dead centered. And it's the same thing here, right? It says no trend. You want to direct your eyes below. Here, this actually is a pretty good signal. So this helps kind of tie together with what I think I'm going to tell you at the end of the video. So that's a pretty critical signal that was necessary, which did trigger today in the NASDAQ. The weekly chart's not as great, right? You've had some thrust lower ever since this candle, and frankly, it's just kind of just a sideways chop fest, frankly. Let's go to the IWM. So the IWM here has been trying to do the thing. And it does actually have the best overall score of the indexes, which makes me uncomfortable because I don't love the IWM. But the market does not care where my heart lies. So on the IWM here, weekly is a bull, 100%. That's not bad. The daily is a 45, right? So perfect structure. Dark green means it's maxed out the score. But like anything else, the momentum here is just gray. So good structure, bad momentum, or middling to non-existent momentum is more accurate. Not all that exciting there in IWM. Let's go to HYG again. We always look at HYG as a metric for risk on or risk off. If you could tell me what interest rates are going to do, the raw interest rate number, could I tell you what's going to happen with the stock market? Probably not. Interest rates went up today, and the market is up 60 points on the SPX. So the idea of rates down, market up, or rates up, market down doesn't really make a ton of sense. But I like to look at HYG as a metric for risk appetite, and here it's just gone completely neutral. So I'm not going to waste anyone's time here trying to decode neutral. I will point this out that the weekly squeeze has a heavy downward bias there. You can see the squeeze histogram is starting to go down this way. Heavy is probably too strong of a word, but it definitely has a downward bias as indicated by the red histogram. And at some point, and again, even if you never care to trade HYG, which 99.9% of you never will, you want to use it as a risk proxy, because if this goes up, that's bullish, and if it goes down, it's usually going to be bearish. So you want to see next week be a hook and start to take this guy this way for a potential run into the end of the year. Let's go over to VIX. So VIX here, kind of right back into its cave. Building a new squeeze here, so I don't see any particular issue at the exact moment. Nor do I see anything fresh to do with VIX here. So this definitely helps the bulls, as long as it stays below, well, as long as it stays below today's high. So as long as they can keep it below, like, let's just give me 17 on this one. It's a little above the number there, but as long as they keep it below 17, I think it's still going to continue to heavily favor the bulls. Don't see a ton more there that I want to take a look at. So let's do this. I wasn't necessarily planning on doing this, but let's do this together. And as I pull this up in another monitor, you're going to have about 10 seconds on your end. And I would like for you to drop us a like, drop us a comment, even if it's a spite like, because the content has not changed for 3 weeks, it still helps us out. So let's look over here. So this is the fastest way I can review markets. I do like to review them in depth with you guys just because it makes sense. But when everything's neutral, I think it demands a little bit more close attention. So where's the dynamism here? Of all the things, actually, the one we didn't look at is the Dow, and it actually has the best score. So again, it's not a bullish score, but it is neutral up. And it does have the best momentum of all the indexes, and it has the best structure. So that's going to continue to favor financials and healthcare and a little bit of tech. So that definitely sides the market that way. The Mag 7 index here, kind of just dead in the water, and it has been for some time, so not a whole lot to see there. Momentum is a basket. You can track that with MTUM. That's actually neutral down. And then world markets here, kind of middling. The DAX, which is Germany, which is Europe, has the best score of everything. And that heavily would favor financials and industrials. And the rest of this stuff's just kind of bleh. So, no surprise that it's neutral when so many things on an index level are neutral. So let's look here at the sectors and see what looks decent. So we got dynamism here, and definitely over here in financials, big time. And don't have a ton elsewhere. So where to focus? Pretty much exactly where we said, based on just the Dow setup, which is going to be financials and healthcare. And then XLY of all things, which is going to be Tesla and Amazon and a few other things, Starbucks, McDonald's, all that junk. That looks decent as well. So the best thing that I see on the board right now is financials. And of course that is buoyed by what we're seeing in the Dow. So all of that looks pretty good. Let's go back here for a second and we'll end the video with tying it all together. So my bias going into next week is that low volume favors bulls, right? We saw that in spades in on Thanksgiving, right? Going into Thanksgiving week, things didn't look all that great, and then Thanksgiving week itself, which had low volume, had the Nasdaq up like 5%. So my bias going into next week is that that is when low volume will kick in. The true seasonality, everybody likes to talk about the Santa Claus rally. Kind of makes me die inside when I hear that a little bit, I'll be honest, but let's just go with it because that's the nomenclature. The Santa Claus rally actually doesn't kick in until after Thanksgiving, basically after next week. So you're going to have a little stretch of time there into the end of the year where the seasonality is quite favorable. But low volume, I imagine, kicks in next week, right? You're going to have Christmas. You're going to have a lot of half days. A lot of folks are just going to take off on Monday and then come back the next Monday, right? So a lot of professional traders will be away from the desk, and you're going to have lower volume just from that dynamic. Low volume, and write this down because I don't think a lot of people know this. Low volume favors the bulls, right? Just because something goes up on low volume doesn't mean it didn't go up. Now, do I prefer to see big volume? Sometimes yes, especially during breakouts. But go back and review what happened on Thanksgiving, and you'll see the potential of what low volume can do. So my bias going into next week, understanding nothing else other than it's more than likely going to be a low volume week, is that low volume will favor the bullish side of the market. After we did our review here, it is a thin spot. The weekly charts are still perfectly fine. The daily charts are still perfectly fine as well. They're just not dynamic like they've been, right? There's a marked difference between when a setup looks like this and when a setup looks like this, right? That's when it gets messy. Of course, this is the easy part. But as we went through the video, one thing that I did not see, because I had not looked at daily charts until I started making the video, is that you do have, as of right now, bull slingshot on the QQQ. So is that enough? It's a start, right? You have to have this before you can get this. And now this, the top indicator, the trend oscillator, is actually the more important one of the two. However, think of it like a plane, right? So I'll finish with my little cute plane analogy. And I have a very good drawing for a plane. So that's your plane. Very big tail, very big tailwind. That's your plane, right? Now you want to get the plane into the air. For this analogy, going into the air, the plane is a trend, right? You want to get trend. How do you get trend? Well, in the same way that the plane is on the ground, and then it tries to go into the air, it needs to use a lot of thrust, right? So thrust down the runway, and then the speed causes lift, and then once it's 30, 40,000 feet in the air, then it's just gliding right along. So think of this dynamic, getting the plane off the ground. Think of that as this. Getting the plane to stay in flight once it's, however high planes fly, 35,000 feet or whatever the number, that's this one, right? So I can't be mad at this one for being out of phase because that's like being mad at a plane for being on the ground and not in the air, right? It's a two-stage process. You got to push, then fly. So going into next week, this is the best signal I see. I do want to stay focused on tech, in my opinion. Well, actually, you know what? Now that I think about that, although I am more focused on tech myself, the best setups are in the Dow right now, and that means that the best sector is financials and healthcare. My bias going into next week, though, is that this signal on the Qs and the low volume should be enough to push things higher. Of course, keep things, from a probabilistic point of view. Understand that the setup here is a neutral setup. So anything goes, but I'm seeing enough here that it would keep me biased towards the long side. Very thinly, maybe 60-40, more towards the buy side. It doesn't sound like a huge edge, but if you think about Vegas, all those big buildings in Vegas were built with 1 to 5% edge. So if it's 60-40, that's usually good enough. So that's the way that I'm going to play it, guys, going into next week. We'll take it one day at a time, of course, but that's the way that I'm seeing the markets going into next week. All right, guys, that's my time. Thanks as always. See you in the next video. Cheers.